Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about CARMAX INC quarterly report. CARMAX Inc. offers a variety of businesses and services through its two segments, CARMAX Sales Operations and CARMAX Auto Finance. Key services include retailing used vehicle auctions, extended protection plans for customers, reconditioning and vehicle repair services, financing alternatives for retail customers across various credit spectrums. These services cater to a wide range of customers, providing them with options for purchasing and financing used vehicles. CARMAX Inc.'s stock price plummets by 41.98%. The stock price of CARMAX Inc. (KMX) has significantly dropped by 41.98% in the past year, primarily due to a dismal second quarter fiscal year 2026 earnings report released on September 26, 2025. The report revealed a substantial miss on both earnings per share and revenue expectations, triggering a sharp sell-off in the company's shares. Key factors contributing to this decline include a significant earnings miss of over 37%, a revenue shortfall of 6% year-over-year, declining unit sales across retail and wholesale segments, compressed profit margins, higher loan loss provisions, and high interest rates and inflationary pressures that have eroded vehicle affordability. These challenges have led investors to reevaluate their confidence in the company's future performance. The stock plummeted by as much as 19–25% in early trading on September 25–26, 2025, reaching a 5-year low of $45.60 per share. The decline highlights concerns about CARMAX's ability to navigate the current market conditions and maintain its profitability amidst rising interest rates and inflationary pressures. The primary drivers of revenue growth or decline for a company can be attributed to several key factors. On the growth side, wholesale unit sales, vehicles purchased from dealers, and CARMAX Auto Finance income have all seen significant increases. Additionally, market share gains through an omnichannel buying and selling experience, advertising, hiring and retaining a skilled workforce, leveraging data and advanced analytics, improving efficiency, and expanding presence in existing markets have contributed to revenue growth. On the decline side, used unit sales, net earnings per diluted share, used vehicle revenues, and wholesale vehicle revenues have all seen decreases. These declines can be attributed to various factors, such as increased compensation and benefits, cost pressures offsetting expense efficiencies, unfavorable loss performance on loans originated in 2022 and 2023 due to inflationary environments, and a decrease in net loan originations due to decreased used unit sales and average amount financed. Net income experienced fluctuations between Q2 2024 and Q2 2025, with a decrease of $37.4 million, 28%, in the former period, but an increase of $20.5 million, 7%, in the latter. However, when comparing the full year 2024 to 2025, net income rose by 7%. The trend was inconsistent across different time frames. Profit margins also underwent changes, with a notable decrease in gross profit margin, -5.6%, and CAF income margin, -11.2%, in the 3 months ended August 31, 2025 compared to 2024. Conversely, the 6-month period saw an increase in gross profit margin, 3.8%, but a decline in CAF income margin, -7%. These variations suggest that the company faced challenges in maintaining consistent profitability across different periods. The company's financial performance indicates a strong ability to generate cash from its core operations. The net cash provided by operating activities in 2025 was $1,085,037, demonstrating a positive operating cash flow. This suggests that the company's business model is generating sufficient revenue to cover expenses and produce excess cash, positioning it for long-term financial stability. The company's debt level and interest expenses have shown mixed trends over the given period. While total debt decreased from $21,161,218 to $20,879,122 on some dates, it increased by $63,425 between February 28 and August 31. Similarly, interest expenses showed a decrease in certain periods, such as for the 3 months ended August 2025, $199,200,000 versus -$193,700,000 in 2024, but also an increase of $0.5 million for the same period on another date. These conflicting trends indicate that there has been no significant change in either debt level or interest expenses overall. Management's outlook for CARMAX is centered around capturing additional profits through CARMAX Auto Finance while reducing reliance on third-party finance sources. Key strategies include investing in digital capabilities and expanding store footprint, accelerating share repurchases to return value to shareholders, driving down costs, particularly the cost of sales, by $125 per unit, achieving a SG and expense ratio in the mid-70% range. Management acknowledges uncertainty due to external factors such as economic downturns, inflationary pressures, and trade policies. However, they remain focused on their core business and are committed to adapting to changes in the competitive landscape. The company has a history of buying back shares, with notable transactions including a total of 2,921,000 shares were repurchased in the 3 months ended August 31, 2025. $384.9 million was spent on share buybacks in the first 6 months of fiscal 2026, with $1.56 billion remaining available for repurchase out of a total board authorization of $2 billion. It is clear that buying back shares remains a significant strategy for the company. Concerns about inventory buildup and supply chain disruption. The company's financial summary highlights concerns regarding inventory buildup and supply chain disruption. Specifically, there is a notable increase in inventory levels from $3.9 billion to $3.1 billion between February 2025 and August 2025. Additionally, the 6 months ended August 31, 2025, saw an inventory level of $785 million compared to $280,000 in the same period last year. The buildup is attributed to increased inventory ahead of the second quarter due to tariff speculation and depreciation across inventory in May-June 2025. Furthermore, there are concerns about supply chain disruption, including reduced availability or access to sources of inventory and difficulties in expeditiously liquidating inventory. These issues may have significant implications for the company's operations and financial performance. That concludes the financial summary for CARMAX INC. Feel free to comment below, and I will be happy to answer them when possible.